It's 3:17 a.m. in Washington. A red alert blinks. Phones light up. Beijing is selling. Not quietly, not slowly. Trillions of dollars. Bond traders stop laughing. Mortgages shift. Corporate loans shift. Most Americans have no idea why. Because this isn't just about China. It's about a system so huge, so interlocked, one move can ripple across the globe. What if China actually dumped U.S. debt? The U.S. owes over $34 trillion. The number is abstract. The interest is not. It's climbing, fast. Tensions with China are real. Trade wars, tech restrictions, strategic rivalry. Fear feels logical, but the story isn't simple. Here's how it works. The U.S. spends more than it collects. It borrows, issues Treasury bonds, IOUs, says, "Lend me money, I'll pay interest." Investors buy them. Banks, pension funds, insurance companies, foreign governments. China owns about $1 trillion, a slice, not the whole pie. Why buy U.S. debt? China exports goods, gets paid in dollars. Now trillions of dollars sit idle. Where to store them? Only one market can absorb that scale. U.S. Treasuries. It's plumbing, not loyalty. Imagine China sells aggressively, hundreds of billions. Bond prices fall, yields spike. Borrowing costs rise, mortgages rise, corporate loans rise, government interest rises. Pain spreads. But here's the irony. Sell too fast, take losses yourself. Flood the house while still inside it. Other buyers step in. Pension funds love higher yields. Insurance companies too. Even the Federal Reserve can stabilize. Zoom out. China selling gives dollars. To offload those dollars weakens their own currency. Exports get pricier. Pressure returns to China's economy. Public perception, China owns America. Reality, only a small slice. Americans hold far more, in retirement accounts, banks, mutual funds. Not a hostage scenario, mutual dependence. The real risk isn't dramatic midnight sell-off. It's slow, structural shift. China has been reducing Treasury holdings for a decade. Gradual diversification, gold, other currencies, parallel systems. The math gets uncomfortable. U.S. deficits remain huge. Interest payments climb. If global demand weakens, yields stay high. Debt costs rise. Deficits grow. Cycle repeats. Is it collapsing? No, a voice says. It's adjusting. A crisis would need more. Inflation, policy mistakes, weak demand, multiple cracks at once. History is revealing. In every major crisis, capital flows towards treasuries, even when chaos starts in the U.S. The feared system is also the trusted system. Trust is slow to build, slow to fade. If the world slowly moves away from dollars, it won't be dramatic. Tiny adjustments, trade deals, currency swaps, accumulating changes. Empires drift, rarely fall overnight. So what happens if China sells? Markets react, headlines scream, yields spike. Politicians talk confidently. Then the system absorbs the shock. Because the real strength isn't who owns it, it's how deeply the system is embedded. Mortgages, banks, retirement funds, collateral markets. China can sell bonds. It cannot easily sell the system itself. Not cleanly, not quickly. The story isn't dominance, not collapse. Interdependence. A fragile balance where every major player holds a piece. Pull too hard, everyone feels it. In a world built on debt, recoil matters.
Nobody acts without calculating the cost. And the real question lingers. How long can the system adjust before the pressure finds a crack no one anticipated?